All right. Good morning, everybody. TGIF. So we're kind of looking at a mixed market with the Dow down 0.25%, small caps flat, S&P and the Nasdaq near flat but a little red, and market just waiting for the end of the week. Now we made some progress yesterday, which we'll get to on the daily and the weekly chart. We're going to get some retail data this morning. And by the afternoon, we should have a decent 0-day opportunity unless they do a data dump on us, right? And that's something I've been mentioning more lately. It's a habit of administrations when they got a lot going on and they think that it's going to affect the market, that they'll wait into the later part of the day on a Friday and then do a data dump. We haven't really seen it yet, but doesn't mean it's not coming or that they won't use that tactic. There's been some moves this morning in crude and some pretty good moves in the dollar too. The dollar going down is part of the administration's plan, but on the other side of that, they also want the cost of energy to go down. So this isn't working in a way that they want, but crude had already sold off into a support level. So, we often find news or headlines that support a narrative or a reason why price does what we all expected it to do, like rise up off of that support level. It was going to rise either way. We just didn't know what news it was going to be that they were going to apply to the why. After being stuck with the volatility trigger most of the week, we're above that now. 0 gamma, 10-day, 3-week, 20-day, 10-week. We're through all of it. We just have to keep it. And if we look higher, 61.75 is the call wall, with 59.25 as the put wall, completely outside of the last 2 weeks range. So I mentioned progress that we made yesterday. We've been in this complex topping pattern, right? So I'm on a daily chart. We've been setting these at lower highs, and we finally broke that yesterday. Now, it doesn't mean that everything's good and done and that there's no more threat, but when we had set that high and then we started getting these lower highs, we also had started getting these lower lows. Then we changed that. Now we had that big breakout of the last 3 days. Then we had the big breakout on that level right there. And that's the key to what I'm wanting to focus on today, is a new high higher than that. So it's a really good start. It's very likely that any analyst would group all of these together, and we don't have, like a singularity. So it wouldn't surprise if before we get back up to this level here, that we pull back and we set a higher low here. We could break this 60.25 and still set a higher low from these. It's still a complex topping pattern. This doesn't get us out of the woods yet, but it's a really good start. So when we zoom out and put it in context, kind of see the mess that we're in. Now, I'd mentioned yesterday that it was starting to look like it would be a good time to lean into those long opportunities. I think there's still time on the week. Maybe we break out and run back above 6,200 and like really expand with a whole new leg, but I don't see it coming. I just think that we can get back up there, maybe overshoot it a little bit, set a new high, but I don't think we can keep that high yet. And of course, we're not crashing and burning. The main takeaway that I've been trying to stress a lot this week is that as much as it feels bearish, and there's a lot of headlines and a lot of analysts out there trying to sell the idea that it's all going to come tumbling down, it still isn't. We've got a market maker move this morning, so they're hedging. They are worried about something. We don't know what that something is necessarily because the economic events we have on the table today, none of them are big enough to warrant the need for the market maker move. So, we look at the counter today and kind of ask, what the heck are they hedging for? Retail sales? Okay, it's possible. Manufacturing? So keep your eye on the market maker move past 830 and see if it begins to decrease. Now, it has a shelf life. It's going to be gone by the end of the day either way. So at some point, even if they didn't begin to unwind it, it would begin to shrink just because by the end of the day, it's going to be gone. But if they've put it on for a specific event, like an 830 economic event, after 830, it will begin to shrink and then it'll just disappear. If you don't have Thinkorswim and you don't have this label, then go into the options chain on the ES and look at the implied volatility average. On most brokers, that's going to be on the right side. Look at the front expiration and check that average against the next expiration out. If the one in the front is bigger than the one in the back, you have a market maker move. So if it's going to begin to unwind, that front number will begin to shrink and drop lower than the next number out, then we won't be in a market maker move anymore. And it'll show that they're either unwinding or that if it gets late enough in the day, it just will dissipate on its own. Since we're flat, we really don't have any edge towards, hitting one side or the other early enough in the day. We haven't done it yet, so it's a coin toss on which direction we're going to go. It is worth noting that we would need to break out higher than yesterday to hit the upside, but we wouldn't have to break out of yesterday to hit the bottom side. Then, of course, we did have a breakout and we weren't able to keep it. That's a bearish bias when we get an inside day breakout and then we fail to keep it. So, of course, we can turn that around with news or, surprise data. But just as a good rule of thumb, if we started an inside day breakout and then we fail it, then that's a bearish check. We're getting a little extended from the weekly floor pivot. And as much as I've tried to quantify this over the years, I don't have a really good answer for how far is too far. We do it with the 10 all the time, but the weekly pivot is a little bit different. Also, the downside distance is different than the upside distance. When we expand to the downside below the weekly pivot, we can average 4.5 to 6% to the downside before it gets a little oversold, if you want to use that phrase, and we begin mean reverting back the other direction. On the upside, I've seen 2, maybe 2.5 as kind of that stretching point before we see the market struggle to go higher. So we're at 1.8. If this was Wednesday instead of Friday, I'd say it's possible that we could break that high, leg up again, maybe get into 2 or 2.25 distance from this weekly pivot. But with it being Friday and not much left on the week, we may try to test that. I just don't see how we're going to make it above 61.50 and sustain it today unless we get some really good news that would fundamentally change the outlook of the market right now, because we're not in this bearish bias, which is what I've been trying to promote this week. Is, we ain't bullish, but we're not selling off, so we're not bearish either. So if we could begin to turn bullish, or even just remove some more negative sentiment out of the market with some kind of news this week, midday today, then 61.50 could get taken out. But without that, I think we test it at the most, and that we just hold the line going into the day, going into the end of the day. It's always worth doing the alternate thesis, right? So my base case today is that we're going to hold the line and go into the close. We discussed a breakout, how we already did it. We broke out and it failed and we came back in. Now we can run an alternate thesis. What if it just gets negative today, just gets nasty? Then we want to consider that we would take out all of yesterday and test the low on the week. $60.15, that's pretty close to $60.11. And if we get that close to 6,000, then it'd be very likely we just go ahead and go on down and hit 6,000. Below that, 59.50. We can make all of that, and it still wouldn't be considered a bearish market. Right? That wouldn't even put us with a new low lower than this. So that would be the alternate thesis today, is that we just start to get really negative and we sell off. We would need a catalyst for that too, right? We don't have one necessarily big enough to break 61.50 and run us up. I don't think we've got one big enough to break 6,000 and run us down. Unless whatever it is that they're hedging for this morning is going to be explosive enough to get that done. We got a little oddity today. Normally when they're hedging, we have lower volume. So we can see we had about 80,000 and we've got the market maker move. We don't usually get both. So it's not impossible, but it does show a little bit of disagreement, because if they sit out for the market maker move, then it kind of implies they're all on the same page. There's something to worry about and they're waiting. They haven't finished their business for the day. But if they've already been putting in the work and they're hedging, then it kind of shrinks down the idea of how many groups may be hedging. On today's floor pivot, it is higher than yesterday. That's bullish. Price opened above it. That's bullish. We haven't hit it yet, which gives us an MDP for Monday if we end up finishing the whole day without hitting it. But there's an 80% chance that price is going to hit that pivot. And if we're above it, we haven't even got into the channel yet, then, that's saying that it's more likely we're going to go down and hit that pivot. It's underneath the cog line, which puts us in line to hit 6,100. So I think if we get inside this channel, 6120, that we're going to hit the floor pivot. And if we get that close, I think we'll hit this lower ADR. So 6092 cog line could very likely be the lower end. Then we can just chop about and get into the weekend without giving up too much of our gains. And the gains are the gains that we made this week, right? So we accomplished getting that new high. And we want to see the market keep most of this run that it took. We don't want to see it give it back and get back inside this box that we were in. That'll just get us stuck again. If we make that drop to the downside today and we hit the lower ADR, that lower ADR is just above our week's point of control. We'll look at that as an area of unfinished business, possibly supportive, definitely something that would resist price if we tried to go down through it. It's not to say we can't go through it, just that it would be a fight. So it's another reason why we would expect if we did begin to get weak, that I don't think it would be some really big dump. We've got some decent structure underneath this to help us out, stop that from getting worse. When we're looking at this weekly volume, you can see we put in a lot of work above that 6132 area. So we call that a ceiling, right? We ran up and we hit a bunch of liquidity up there. Unlike these previous levels back here last week, when we went up there, it stayed pretty shallow. This one didn't, right? We see how it's had that elevated volume when we popped up. We didn't stay there very long, but we had a significant amount of volume. Or here we were there longer and we built out the volume wider. With that expansion yesterday, it may be worth looking at the pivots, S&R lines. I guess we'll just do it this way. All right, R1, R2, and R3. 6162 is the first R level, the first resistance level we would hit on a continued move to the upside, but it's beyond the 6152. So I think that options level is probably going to be more restrictive than that R1. If we get through our own floor pivot and we break out the bottom of the channel, 6077 is the first support structure in the floor pivots, the S1. And it's really wide, right? Because of that expanded move that we had yesterday, the floor pivot for today pretty wide. I think it'll be wider Monday or Tuesday. So you can see how wide it could be and how it's not there yet. But I think it's beginning to expand a little bit. Ten-day, 30-minute volume profile. We got a little discrepancy with TPO, but the idea was that we would see the point of control move back and forth between these two spots, 60.88 and 60.70. There's nothing else around anywhere that we're going to move to anytime soon. So the good thing is we're above this level. We kind of need to keep it. It's another reason to believe why if we get weak today, we won't get some massive, big move to the downside. We've just got so much structure down there. No new VPOC level from yesterday. We've already cut through that area. And we got really close to this 61.47 VPOC overhead from January 24th. If we make another attempt at a breakout above our own Globex, we've got that level to deal with. Looks like we got a little disagreement down here this morning once we sold into this area. We didn't have a lot of trades down here, but we had a lot of volume down here. That implies that there were some really big positions down there that we hit rather than, a lot of trades that we hit. Fewer trades, bigger position. All right, as we do every Friday, we take a look at next week's range. It's going to be a short week next week. So the default expectation when we have that situation is that the box will be smaller next week because there's less days, right? It's kind of like the idea of doing 60 miles an hour, but you're only going to travel for 45 minutes instead of an hour. Well, the typical range is 5 days. So we're measuring how far can the market move in 5 days. If we're trying to compare that to next week, when we have a 4-day week, how far can the market travel in 4 days isn't the same as how far it can travel in 5 days. But we just measured that box. It didn't look much different than the current week, but it's not set in stone until 4 o'clock tonight. After 4, really, it's like 4:15. So throughout the day today, those lines are going to move. They're going to shift up and down. After 4, they'll lock like all these other ones locked. Then they won't move anymore. So keep your eye on it through the day. See if it continues to expand or if it shrinks more. And then we'll evaluate it again on Monday and see what we ended up with. Try to figure out what the plan is for the week. We're a half a day, 0.5% above the 10-day. It's a good start. Like to see it a little closer to 1. If we stay too close to the 10-day, then it's likely we can go back and hit it again. But we've been kind of holding around it. And one way to look at it is that we finally are starting to push away from it. But we tried yesterday, and of course we're giving that back now this morning. So we need to get through that 0.75% expansion from yesterday and really push up into that 1% area. Otherwise, we get even just a little lower, and it's likely we're going to come right back to the 10 again. 1.5% above the 10-week. That's putting us in the same position as with the 10-day. We're a little too close. We need to expand a little more, or we can go back to the 10, get drawn back into it again. So this doesn't owe us a move down there. But it does show on both of those that we're not overbought. We haven't moved too far too fast yesterday, and it doesn't owe us any sort of mean reversion from the move that we made yesterday. And looking at the markets over a 5-day period, and we keep hearing about how nasty it is out there, but in these 9 sectors, the 2 that are red are just barely red, right? Healthcare is flat, and financials are maybe a 1/4 of a point to the downside. Now, granted, they don't look good, just like the S&P and the NASDAQ chopping sideways doesn't look good. But we continue to not get these really big negative market breadth signals, and we don't get big negative sell-offs yet. So all those that are yelling that it's going to crash and burn and warning people, it's a coin toss. We don't know what we're going to get yet. So we got China up this morning, and gold almost up enough to meet our benchmark. That's a small list. Now we got nat gas too. It's right up underneath that $20 level. It's the spot that it's been struggling with. We've got history there. But if we can get through there, then 21.5, the next level. I don't see anything in this that I want to participate in, but whatever. A lot of these that are up, these are all China. KWeb, FXI, EEM. That's another one that's China down here. So we got precious metals with silver, gold, gold miners. Pretty good move in crude, but we were starting to, turn around on that structure yesterday, so it's not a surprise. Anchored VWAP's likely the target for right now, $79. Pot stocks. And it looks like we're getting a little attention to Bitcoin. So that can change things around quite a bit. What we don't have, and what we would want to see if we're going to get one of those rally days in the S&P and the NASDAQ, we'd want those 3 sectors that we need: communications, technology, chips, financials, consumer discretionary, the Mag 7, basically, and we don't have them. So if we don't have them, we can get them at some point today. Or if we leave those out of it, they can't go down. They can go sideways and we can still rally, but they can't go down and have us rally. The other piece would be if that doesn't cause us to break out, then we'll need something else. It could be options flow on the S&P and the NASDAQ. That can do it, but we won't get those until after the open. we could get some surprise headlines that could do it, or there's that move that I was talking about in the dollar. So this middle chart is the dollar. We broke 107. Now we're basically at 107. So sure, we broke it, we're there, but we want to see it get underneath that. Say 106.5 would be good, maybe even a little less. So that's good. It's moving in the right direction. Getting the 10-year down more, say below that 4.5, that would be useful today or helpful today if we're looking for that continued breakout rally. So it's a good start with the dollar. We just need some help. So either the Mag 7 does it, treasuries do it, or the options flows do it. That'd be the three levels or the three things to look at today. Otherwise, no breakout, right? It takes that off the table. The only thing we have after that is that we go sideways and we go down. I already talked about all the structure down there and the support that we have around that 6,100. We can get lower than that, but I think it'd be a fight. %12 of the NASDAQ this morning is up more than 0.5%. That's not a good start. We can see we've got chips in there. If we're going to have a rally day, we definitely want the chips. But that's it. No Mag 7 other than Tesla. Got one Mag 7 name. And for the S&P, 7% of the S&P is up 0.5%. And the only one we have is Tesla. So if we're going to get that big breakout rally day today, it doesn't look like we're going to get it from the Mag 7. Now, on the other side of that, we really don't have anything negative yet either. So we need this news at 8:30. See how that changes things. Watch for the market maker moves. See if they begin to unwind it after 8:30. Just keep your eye on the news. Look for the flows to come in. We got 12% of the NASDAQ down 0.5%. And Google's on that list. So we got one of the Mag 7 down, one of the Mag 7 up 0.5%. Just a mixed bag of market weighting. And it would not surprise me if the goal today is just make it into the close without giving up too much of what we gained this week. So let's focus on that. Everybody be careful, be safe, have a good